Hello, my name is Steve Bigelow with the Candlestick Forum. The market is still in a good, steady uptrend. The Dow traded up slightly today, or maybe traded off slightly today, but still above the T line. That's a very important factor for identifying whether investor sentiment is still bullish or bearish. Statistically, as long as the indexes stay above the 8 exponential moving average, the T line, the uptrend remains in progress. We can see it more so over here in the NASDAQ, where it basically has been using the T-line as support and now continuing in this uptrend. This makes our new program, what we call the RARE program, Research Analysis Reverse Engineering. If you remember that the candlestick logic is just merely common sense put into a graphic depiction, this is a very easy program to apply. What we're looking for is reverse engineering. When we see a breakout of something, we don't just consider it a breakout, especially if it's in an industry such as the electric vehicle industry, which we are anticipating is going to be extremely strong for the next 2 years. It allows the candlestick investor to see the appropriate times when to be buying. If they didn't buy on this day, they weren't buying on this day. But the fact that the price supported right here on the T line started the next uptrend or told you the profit taking was over. So you've got basically a fry pan bottom breakout. Now we're looking for more upside. But we're not just expecting upside. We go back and see what was the information or the announcement that may have caused this price move. So candlestick analysis is not just merely buying on big breakout situations. It's telling you when not to get in, what's expected after a breakout. It should trade positive. That would have kept us out of a trade if we were thinking about buying it today. This is the information that allows an investor to dramatically improve the probabilities of being in the right trade at the right time. Just the fact that you had a fry pan bottom on Sunworks. If you didn't buy it on this day, you got ready to buy it because that's a fry pan bottom breakout. Didn't work the next day, didn't confirm the next day. But as a candlestick investor, we can see that consolidation was not very decisive. That's called a double doji. We're buying on this day and making, or at least being put in a situation where the probabilities of being in the right place at the right time are extremely high. And because it's a pattern breakout with a strong price move, we're getting in a price move that not only is moving in the right direction, but moving in the right direction with a lot of strength. That has occurred in our, what we call our sector analysis. Again, electronic or electric vehicles, fuel cell companies, lithium batteries are probably going to be a very large expanding market over the next 2 years. So when we see a breakout, we can go back and say what was announced, and then we go into our regular analysis that we can stay long as it stays above the T line. So today, when we saw SPI coming out of a fry pan bottom, some sort of announcement, we go back and find out what that announcement was to see whether that's going to warrant the continuation of a strong price move after the fry pan bottom. We can use it for specific sectors. Again, reiterating that the electric vehicle, fuel cell, automobiles, the lithium battery sector, anything related to alternative energy vehicles are probably going to be, number one, fairly strong just because of consumer acceptance that electric vehicles are now probably a viable transportation mode, not merely just the gas engine. But it also, the RARE program also identifies more general buying sectors or bullish sectors. What's being affected by the new administration's policies? Well, maybe the solar energy. I say maybe because a lot of times when we think something is going to happen or should happen, it does the opposite. But candlestick analysis allows you to identify which sectors everybody's confirming is moving in the right direction. Conversely, which sectors might be getting hurt by the new administration or any administration coming into office. Right now, it looks like the policies are going to be hurting the oil sector. Good places to go short. EOG had big selling. You can take a look at Occidental, Apache, ExxonMobil, ConocoPhillips, all viable short positioning in your portfolio so that you're not 100% long or 100% short. You've got a mixture of good things that will be shorts as well as positions that are going to be longs. That'll be it. We're anxious to show everybody this new program, and it's not really that difficult. It's merely just common sense being more directed toward what the candlestick charts are telling us and not just relying on the fact that there's bullish sentiment coming into a sector or a stock. We can go back and check to see if that information is something that is going to put, for example, an electric vehicle ahead of its competitors, giving it a good run. This is based upon, we think the electric vehicle sector is probably going to be strong for at least the next 2 to 5 years. So with that, join us this Saturday. No, let's see. January, what is today? January 30th. We're going to do what we call our mini spotlight series, about a 90-minute concentrated training on how to use the RARE system effectively. Join us, and we'll hopefully see you in the chat rooms. That'll be it.